Hi, this is John Wassam. I'm the RPS APS Program Manager. This is the 2017 Massachusetts RPS and APS Compliance Filing Webinar. We're going to go through the slides or this webinar presentation first, and then we will pick up the workbook after that. If you have questions, please ask them through the question text box, and I think we'll answer questions on this webinar first, if you have any at that time, and then we'll pick up the workbook and we'll answer questions to that at the end. First, we want to go through the review of the filing process this year. You should have received your 2015, 2016 bank totals if you had any. Those were provided on May 1st. The retail load obligations were provided on May 15th. And the instructions were sent last week on May 29th. If you have any questions or need further information on any of that, please respond to the doer.rps@state.ma.us, and we will get back to you as soon as possible on those issues. The end of trading this year is June 15th at 11:59 p.m. on the NEPOOL GIS system. So everything needs to be completed by then with your generation certificates. If you have alternative compliance payments due, they must be submitted to the Mass CEC by Tuesday, June 26th. There is the compliance, the tab N on the workbook has the receipt copy that you would send to the Mass CEC or email to the Mass CEC with their payment. We have not included the wire instructions at this point. We do intend to send those out. CEC wants them to go out encrypted. We are working between them, us, and our IT department to get them out in a encrypted format, but those should come out likely this week and no later than early next week. The compliance filings this year are due on Monday, July 2nd, because the first is on Sunday. When you file, you must file both the electronic version, so you would send those to doer.rps@state at the link below. And then you must also submit the hard copy of the filing. And those would be sent, there's on the instruction book on page 2 to the Mass Department of Energy Resources at 100 Cambridge Street. But all that is on the instructions. We are not going through the instructions today, but refer to those if you have any questions as well, and they may be able to answer your questions. There are two major items this year of what's new. There's actually a trifurcation of the solar carve-out 2 exemptions, and these are the dates are shown below. The first one is an exemption. There's no minimum standard to meet for that. 2 and 3 do have minimum standards, and the load is subject to those, and we'll show those on the next page or so. And as I said, new wire instructions this year for the Mass CEC, and we will send those later this week or no later than next week.
So just a review of the solar carve-out 1 minimum standards and which load each minimum standard applies to. So if you served any load in 2017 that was from a long-term contract signed on or before 6/28/13, so June 28, 2013, you'll see in the workbook where to fill that in, and that load will have a minimum standard of 0.9861%. For the majority, I imagine, of your SREC 1 minimum standard, so basically any load served in 2017 for contracts executed or extended after June 28, 2013, that load will have a minimum standard of 1.6313%. So the solar carve-out 2 minimum standards, we have 3 parts to this. So we have a full exemption, and then we have 2 separate minimum standards. So any load that was served in 2017 that was from a long-term contract signed on or before April 25th, 2014, that load is exempt from all SREC 2 minimum standards. Now, when you get into the workbook, you're going to see where you're going to put in the 2 different load numbers now for the 2 different minimum standards. So if you have contracts that were served in 2017 that were signed after April 25th, 2014, but on or before May 8th, 2016, that has a minimum standard of 2.0197%. The rest of the load that was signed after May 8th, 2016, that has a minimum standard of 2.8628%. And again, when we go to the workbook later, we'll show you where exactly you need to fill in those load figures. So this is just our annual reminder about solar carve-out strategies and best practices, mainly with regarding any auction certificates that you may have in your account from either the older SREC 1 auctions or older SREC 2 auctions. So for this year, for 2017, if you have any SREC 1 auction certificates from 2014 or 2015, you have to utilize them in this compliance year. They will not be valid any year going forward. If you purchased any SREC 1 certificates in last year's auction, so 2016 SRECs, you can use them this year, but you can also hang on to them for another year because they will be valid for the 2018 compliance filing. For SREC 2, if you have any 2015 SREC 2 auction certificates, again, you must use them this year because if you do not use them, you will lose them. If you purchased any certificates in last year's auction, you can use them this year or you can hang on to them again for another year because they will be valid for 2018 compliance. And again, as a reminder, if you're not planning on utilizing any of your 2016 SREC 1 or SREC 2 auction certificates, they should just remain in your main GIS account. So don't do anything to them. Don't bank them, don't settle them. If you are doing anything with them, you will be using them towards your compliance. They're specially coded in NEPOL GIS, so they will remain there beyond the trading year. So again, we just have a little chart to remind you which SRECs you can use. SREC 1 and 2 auction certificates you should use this year if you have them, and that you could use for future years.
Thanks, Caitlin. Now we'll look at banking certificates. We do recommend that if possible, you avail yourself of the ability to bank. Banking limits are expressed as a percentage of your compliance obligation. The banking limits are shown on this page. There's no changes since last year. They've remained the same. And bank certificates can then be used in the next 2 compliance years. However, you must settle any certificates that you plan to bank must be settled with the 2017 compliance year. There's no relationship between the banking account in NEPO GIS and what we consider for banking. Banking is strictly an accounting term at DOER, so you must settle those certificates this year if you want to apply them to banking for us. As we said, all certificates must be settled in your Massachusetts sub-accounts by June 15th. Unsettled and errant certificates do create problems for us in reconciling everything, so we strongly urge that you settle everything by June 15th. The only exception would be for auction remitted SRECs and SRECs 2. Next. Alternative compliance payments, as we said, must be made by Tuesday, June 26th. The instructions will be sent. The notification is on tab N. There is another tab called ACP, which summarizes all your ACP from the workbook, and that information is then transferred to tab N, which you must email to the Mass CEC when you wire your payments. You must itemize your payments according to the different types of ACPs, and just noting which ones, how much money refers to each one. The Mass CEC will then send you back an ACP receipt showing what you have wired and where it's been applied. You must include the ACP receipt with your emailed filing. That's why we request that the wires be made early so that you have time to receive the receipt and can include it with your filing. However, if you have not received the receipt from the Mass CEC by July 2nd, you should not delay your submission. Go ahead and email your compliance workbook and then email us the ACP receipt when you receive it. And all of those would be sent to doer.rps@state.ma.us.
So the 2017 SREC auction will be held before the end of July. We do expect to have, it's likely we'll have both auctions again this year, probably a significant volume in SREC 2, but not a large volume in SREC 1. All deposits into the auction account have to be made by June 15th. So you may want to consider depositing any excess certificates you purchased in 2017 into the auction accounts if you, say, have reached your banking limit and have more SREC 1 or SREC 2 certificates and you can bank forward in the 2017 compliance. You can deposit them still into either auction account, SREC 1s into the SREC 1 auction account, SREC 2s into the SREC 2 auction account, and we have information on how to deposit that on our website. If you're interested in bidding into the 2017 SREC auctions, you will need to register by submitting a qualification form to NRNOC, who is our auction agent. We are working with NRNOC on getting that documentation ready. Again, we won't know exactly how much or if we'll have SREC 1 and SREC 2 auctions until June 16th after the close of the trading year on June 15th. But we do expect considerable bidder interest, and we do strongly encourage retail suppliers to actively participate in this year's auction, because it does represent an opportunity for suppliers to manage future compliance costs.
These are related programs, sort of applicable to now and in the future. As many of you should be aware, we are now moving to the SMART program for solar in Massachusetts, called the Solar Massachusetts Renewable Target. It will be expected to start in 2018 with a goal of 1,600 megawatts in Massachusetts. All of the qualified projects will be classified as Class 1. This will not be a solar carve-out program, so that's a big difference with it. But all the generation certificates from this program will be transferred to the electric distribution companies. They will then own the generation certificates from this program. We've had two major procurement programs within DOER during the last year. 83C, which is a wind project, and then 83D, which is a major hydro project, was selected as the winner for that procurement. The suppliers have been selected, and contract negotiations are underway with electric distribution companies for those procurements. Both of the programs are not expected to start until 2020 or later when they begin operation. 83C program is the wind program. It is expected to generate Class 1 generation certificates. The 83D program, hydro in Quebec was selected as the source. This does not qualify for either Class 1 or Class 2 certificates, but they will qualify or expected to qualify for what we're going to call clean energy credits. We call them that KECs, and that would be available in 2020, 2021, or thereabouts. You should be aware that the clean energy standards, the CES program, will be effective in 2018. This program is run or overseen by the Massachusetts Department of Environmental Protection, Mass DEP. It is not a DOER program. However, as noted here, we do intend to have a separate worksheet in the compliance workbook where you would use the load obligations will be the same, will apply to each program. And so you would meet so you'll not have to fill out two workbooks. The minimum standard for the CES is 16% in 2018. However, the Class 1 standard will be 13%. That 13% you still have to meet the RPS standard of 13%, including any solar carve-outs within it, but that 13% will go towards meeting the 16% CES standard. So then the incremental standard to be met for the CES will be 3% of your load. Any Class 1 rec will qualify for a CES obligation. To date, no clean energy credits, which would also qualify, have been qualified at this point in time. And then the further note is that you will likely have to remit a separate alternative compliance payment, and that would go to the Mass Massachusetts DEP or its agent for that. And again, we would likely have that as a separate tab on the workbook. If you have questions about the CES, you should contact the Department of Environmental Protection, DEP. And finally, these are the links and contacts for you. Caitlin handles the SRAC, SRAC2, and the SMART program as well. We will be posting this webinar on our website as well, so you can refer to it if need be. I prefer that all RPS and APS related questions as the filings still go to the DOER.RPS mailbox. That way they don't get lost and more than one person can see those questions or emails coming in. All right. We will check questions. I don't see any questions typed in the box at this time. Now we will move on to the workbook. And we plan to go straight through. So this is pretty straightforward. For contact information, please enter up here, please enter your legal name, and that gets carried through throughout the workbook. This is an important page. This is where you specify what the electricity supply. This is the load obligation here. You would put your sub-account here, and this should match what you receive from DOER here. We do show on this page, you would fill in the monthly, and again, this month, this is on the tab 2, the allocation. This one should roll over from the SCO load obligation, I believe.
We'll have to fill it in.
Yeah, you have to fill this in again with your monthly load. So going back to the prelim page, this total does get carried forward and will be the load obligation for which you would meet the minimum standard would be applied. Table 1B is the disposition of SRECs during the trading year. This is to help you allocate, or how you allocated your SRECs and your SREC2s. So the total would be applied to this in number A here. If you deposited anything in the clearinghouse, it would go here, or a reserved account. And again, these SRECs would not be available for compliance. The other one I want to point out is if you had a case where you had more SRECs available, if you were over the banking limit for whatever reason with your SREC or SREC2s, you can still apply those SRECs to Class 1 because they are considered Class 1. It's not the best use of those SRECs, obviously, because there's a grade price differential between the value of SREC 1 and SREC 2s. But you can apply those excess SRECs and SREC 2s to meeting your Class 1 compliance. And you would enter those here. Moving on. Moving on, this is where you enter your contracts for your exemption for the solar carve-out program. Again, you would enter your monthly load here, and this should equal the total load obligation that we, and again, these numbers should match what we sent you with your load obligation. The next column, E, is the number of contracts that were executed or extended on or before 6/28/2013, and you would put the corresponding load served under these contracts in 2017 here. The net load would be the total load less the exempt contracts. So, and then these figures get carried to the workbooks in the appropriate place. So this would be to column, it would be go to table 6, the solar carve-out program.
Right. So going back to the webinar before, the load entered in column F is applied to that initial smaller minimum standard, and then the resulting load in column G has the larger minimum standard applied to it.
And again, this takes the information by your sub-account and splits that total load into the first bifurcation and the second one. So you put your, I believe these are carried over automatically from the previous page, and then you would put the associated megawatt hours here. Down here, we're asking for this, we're asking for projections of future exempt load. So this should have said prior to 6/28/2013, simply for planning purposes, what the number of contracts will be in the future and the associated megawatt hours. They're not used for anything, they're just used for planning purposes. And obviously they should be diminishing over time. As any contract signed to 2013 would be expected to peter out eventually. The solar carve-out 2 is similar, except there's the extra bifurcation. So this should have said number of contracts, the same as here. Here you enter the number of contracts prior to 4/25/14. Again, this is the total electricity, should be the same as in the prior worksheet. And for the first bifurcation, this is exempt load, as we noted in this column, prior to 4/25, on or before 4/25/2014 would be shown here. Including line losses, that's important. The load obligation is assumed at the interconnection between the grid and the electric distribution company. Nothing is assumed at the retail meter level. So any contracts you had should be boosted up for distribution line losses here. This would be the number of contracts in that window between after 4/25/2014 and on or before May 8th, 2016. This is the associated load for that window, and again, including line losses here. This column takes the net takes this, less this column is the net load, and this is the obligation after May 8th, 2016. Again, you would enter this is automatically entered from the prelim page, but you would enter the associated load prior to 4/25/2014 with the sub-account. And similarly, for the second level, you would enter it here, and the net is calculated over there. Again, down here, table 3C, we're asking for a estimation of future SRAC 2 exemptions, and you would enter it here. The errant page is for certificates that were not correctly settled, and if you have those, then you should report them here. Anything here, you should contact DOER regarding any errant certificates, but they would be reported here. I guess one thing we didn't mention was that you will have to send, like in previous years, the GIS report. It's now called My Certificates Disposition -Quarterly. Those should be sent in the CSV format without any changes or modifications to it. Last year we recommended that there be a naming format for that, and that is found on the instructions, but it's found on the instruction on the second page of the instructions. We're suggesting that you use, say, Q1 and underscore, and then the short name for your supplier short name. You could also add like 2017 Q1 underscore your supplier short name. Those should be submitted along with your filing workbook. But that's our record keeping for what was settled in your accounts. Obviously, the errant accounts would not show up in those files, and then you'll have to identify them separately, and you should contact us about any errant certificates so we can try to rectify the problem with full GIS rather than leaving them as errant certificates. Moving on, this is Table 5, the RPS Class 1 Annual Compliance Calculation. Again, the total load served is filled in over here from the prelim page. You would put your settled certificates in column D. These would be all attributes not documented, so any errant certificates would go into column E. Here you would put the banked amount that you want to use, and again, for 2015 bank, you would have to use them in 2017 compliance, otherwise they will expire at that time. And again, in column G, you would put your 2000 bank certificates here. one of the common problems we have is that if you're using any solar auction certificates, they should not show up in these bank columns. Rather, they would be included with column D in your settled certificates. Then the program calculates, and this is standard for all the other pages as well, any alternative, if you were short in, here's where the obligation is calculated in column J. If you were short certificate of these total certificates, it would calculate what ACP credits you would be required to pay. And this is the total of columns D through A. So this is where the total becomes from these columns. And then we subtract this from this to ascertain what the ACP payment would be. If you have excess certificates, so in that case you would have no ACP payment, but you have excess certificate, or you have total certificates here exceed your obligation, then we calculate what the banking limits are here. The banking limits would show here. This would be the total quantity of your banking limits. We take the minimum, obviously, of these two columns, since you cannot exceed your banking limits. And anything that was in excess of the banking limit would be lost. So that's why you try to control how many certificates you have and that they do not exceed the banking limit. This is the solar carve-out page. It's similar to the other pages, except the amount of exemptions get rolled over here. The numbers are showing up here of what the two levels of compliance would be. So this would be for the contracts prior to 6/25, is that right? 6/28, 14, 13. And this would be, in column M, you would put your post contracts, or they'll show up here automatically and calculated. So and then this column is the total, your total obligation for L&M. And again, the workbook goes through the calculation to determine if you have any excess. Just note that the banking limit for SRECs and SREC 2s is only 10%. Again, this page does a similar calculation. We don't show the first exemption here due to size constraint, but it's zero anyway. So the first exemption on prior to 6/28/14 is at zero. We left out that calculation in this workbook, but it wouldn't matter anyway. So we show the two the other two levels are here. This is the first of that window between (4/25/14) and 5/8/2016. That's subject to the 2.019%, and the 2/8 is for the remainder of the loan. And then again, this calculates the total for that obligation. These are all the same, basically the same. This only has one standard The RPS 2 is 2.5909. Again, it goes through the banking. Waste energy is similar. It's at 3.5%. The 2015 banked has been blanked out here because there was no banking in 2015. So there is no certificate to be applied for that. But banking resumed last year at the 5% level, and so you would enter any bank certificates for 2016 here. The APS is similar calculation, and the requirement, the minimum standard is 4.25% in 2017, with a banking limit of 30%. In the green category, if you had green power products and you settled certificates specifically for those programs, you would enter those here. And then we report them to the Mass DEP for greenhouse gas reduction. As noted, these are for RPS Class 1 only. Some have voluntary for specific end users. Some have rates that qualify, and if you bought certificates for those purposes, you would enter those here. Tab 12 is a calculation of the ACP total, so it from every page it's taking whatever ACP you had and entering it here. Then it automatically multiplies by the ACP rate for that class of product. This is an information page. This information actually gets rolled into this page. This is the Clean Energy Center page. You know, we did not include the wire instructions here, but we will be sending those to you. So though anything that was on that prior page gets rolled over to here, this is what you would send to Mass CEC at the time you wired your ACP payments. Going back here, the next pages, these are signature required with, they have to be notarized for this. This is the certificate and statement of authorization. When you mail your hard copy, these pages should be included with that with signatures. This one. These aren't notarized. This one is. Next one. This one has to be notarized at the bottom. This is the certificate and statement of authorization. That you were authorized to make this filing, and the signature must be notarized at the same time. You would send these back with your hard copy filing. Again, the address for this is found on page 2 of the instructions that we sent you. Sent to 100 Cambridge Street in Boston to DOER, Suite 1020, 02114. And as we noted, this is the copy that you would send to the Mass CEC when you made your payment. And it looks like Sarah's. It looks like Sarah's email fell off. Oh, there it is. This is where you would send it to. This is the email that you would send this tab to. Print it out and send it to this email address. That is the group. Do we have any questions? We're going to check for questions. We have to type it in. There we go. The first question, can we get a copy of this presentation? This presentation is being recorded and will be placed on our website. And it will be available for future reference. We keep it up there, I believe, till the next year, at least. Third question. So start from 2018, LSC has to meet obligations for both RPS, APS, and CES. That is correct. You have to meet obligations for all three, RPS, APS, and CES. Yeah. The fourth question, we're going to handle this one about final numbers. We'll handle this outside of this session.
Yes.
Yes.
Both fourth and fifth question. We'll follow up separately.
Yeah,
we're going to follow up separately on the load revisions from ISO New England and which numbers should be used. We're aware of this issue with a particular supplier, and we'll follow up outside of the webinar. APT amount for the Clean Energy Standard in 2018, I don't know that we know it off the top of our head. It should be in DEP's regulations and probably on their website. I believe it's half of the alternative compliance payment for 2018. Yeah. So for the RPS class, half of the RPS class 1, I believe that the ACP rate for CES is always 50% so half of class 1.
Half of 67 cents.
I think it's actually half of 68. This is for 2018. So whatever, I think our ACP rate of 2018 is $68 or something, and it's half of that, so it'd be about $34 and change. So not seeing any other questions. I guess thanks to everyone for participating in the webinar today. And if you have further questions, don't hesitate to reach out to us. We're available, especially in the next 10 days as you finalize all your settlements at Equal GIS, so you can start preparing your compliance filing forms. We're happy to help. So thanks, everyone.
All right, thank you.